In a world where hopium and common sense collide, starring the CryptoKeeper and BlockchainCrusader. Welcome to Debate Crypto.
Question everything.
Trust nothing.
It's your boys, Keeper and Crusader, here on a beautiful TA Thursday, and we have got a fire show for you tonight. We have got the one and only Bill Noble from Token Metrics. Bill, how are you doing this evening?
Hi, I'm doing good. Thanks for having me.
Dude, super excited to have you on. Y'all know TA Tim from Crypto Jebb's channel. TA Tim, what up?
What is up, everybody?
And your boy, Frankie Candles. You know Frankie Candles, 545. Check him out. Frankie, you doing well?
What is going on, everybody?
And, of course, we've got the one and only Magic Internet Money. Kagan, what is popping?
What's going on, man? You just wanted to say the name.
I did. It was on the tip of my tongue. I was like, I got to spit it out now and get that out there. Well, hey, guys, you know what time it is. Make sure that you jump into the Discord. Our free mint is on the 30th. That's happening just a couple weeks from now. So make sure you jump in there if you want any information, or just go to dangerclosealpha.com. Make sure to check that out. Smash the likes, guys. All the information is down below the video for all of these creators. They work hard for you and have got freaking great information. So if there's somebody up here who you haven't seen before, I can promise you that we follow them and we're friends with them for a reason. So you guys should be absolutely doing the same thing. So make sure that you guys do that. And hey, other than that, smash the likes. Let's have some freaking fun tonight. Chat. Let's get it popping. Everybody be respectful, but let's get it live in the chat. So without further ado, let me just check on the market. You guys know what time it is. It's TA Thursday, so we're going to check out the markets. But let's take a peek at this. So what do we got? We have got the global crypto market cap is at $921.98 billion with a B dollars. That's up 2.5%. We're not going to scroll through all these because you already know what's going on here. If you watch our show whatsoever or watch any of these other creators, you already know. Bitcoin's up 1.5% or so. Everything's up. Maybe a little bit more than that in terms of the alts. Now, ETH is pumping, and I'm going to ask some questions about that tonight. My girl ETH is absolutely rocking, so I want to know what's up with that. BNB up about 3.6%. XRP Army up 1.82%. And everything else is pretty much doing the same thing. You know how it goes. So let's get into it. Miguel, I want you to kick it off this evening with letting us know what's your feeling on the market, and then we'll let the gentleman get into the actual TA side of it. How do you feel about what's going on in the market right now?
Well, currently, I mean, I'm pretty neutral when it comes to feelings. I know the CPI numbers came out the other day, and, they were higher than some people expected. The market had kind of a fake out with a dump down to like 18,900 something, and now we've had back up to 20,000, pushing close to that 21. So I'm kind of neutral right now on what Bitcoin is doing, and kind of like, how Magic says, we're kind of stuck in this range for now. So I'm kind of neutral, man, but I want to hear what everyone else has to think about, the CPI numbers and what was that fake out all about.
Yeah, no doubt. I'm excited to hear the same thing. So I want to start, Bill, you haven't been on the channel before. I want to start off with you. Before you dive into maybe a little bit of TA or kind of showing us where you think the market is going, headed, whatever the case may be, can you tell me what's kind of your style? What's your flavor? What do you do as it relates to TA that's maybe different than some of the other guys? I don't know. What's your style?
All right. So I use a combination of things. Like I'll use the work of Tom DeMark. Right. He was like the original quant technical analyst back in the day when I used to work at Wall Street, because I'm over the age of 35. So I've been using his work for a long time. I combine that with some of the AI and machine learning work that comes from Token Metrics.
Yeah. And
then I'll use things like Hidden Pivot on TradingView. That's like a style. And then, of course, I'm sort of half famous for keeping Gantt charts by hand. I do that on my Twitter. So it's a little bit of the science. It ranges from the scientific to the spooky.
The scientific to the spooky. So going scientific to spooky, we did just have the CPI numbers come out. I think we all knew. All we had to do is look around and see, hey, this, things are not looking good. How do you see? Just let's talk about Bitcoin specifically. How do you see Bitcoin right now? Are we looking good? We looking bad? You feeling neutral? How do you feel about Bitcoin? What do you see going on there?
All right, good question. So CPI comes out, and it looks like everybody wanted to buy the bad news. right? In other words, if you were cheering for it to go lower so you could buy it, you had company, right? So in Bitcoin, here's the token metrics quant AI TA, right? So at 19,300, there was support. They jammed it down there a couple times and it keeps holding. Now, I wanted to buy it at 15 or 16, but so did half the rest of the world. Okay. So did half the rest of the world. And then if you look at ETH, there was 1050. And again, everyone's like, oh yeah, I want, let me hoover up some of that triple digit ETH, and it never gets there. So for the markets and for Bitcoin, right? This is what they threw at the crypto market. Dollar goes much higher, crypto goes up. CPI, horrible. Fed going to talk tough, crypto goes higher. Celsius goes bankrupt. We don't know what's up with that yet, but they threw three things at this market. They threw the kitchen sink at it, and it held. So if it's supposed to go down and it doesn't, what's it going to do? Well, it's going to do what it did today, and it's going to make everybody think twice and wonder. So the final word is the last time the market was down only was 2014. And there was a wick and an ensuing squeeze that lasted 2 weeks where Bitcoin went from 400 to 700. So this thing is giving me the creeps on the squeeze front.
Ooh, talking about a squeeze. Tim, what all right, so Bill's suggesting, hey, we could see something like a short squeeze because everybody's talking about 10K Bitcoin, 12K Bitcoin, 15K Bitcoin. Is that where your mind's at, or you think we might be headed higher?
No, I think so. I've gone on with the show on Coffee and Crypto saying I still think within the next couple of at least next couple of months, if not sooner rather than later, we're going to be going down to about 12.5, 12.6. And there's a lot of things on the charts that are showing that. And I'm very open to seeing the fundamentals come in and change it. But I'm not seeing what I think we need to see for that to happen. And again, even I was one of the people that thought after those numbers came out, we thought they were going to be a little lower, maybe 8.8. They came out higher at 9.1. So I think a lot of people kind of jumped on that. Well, we're going to go down. Although we didn't go down, we were climbing up. I still think very much so. If you're just looking at the charts and you're going back and looking at the history, let's just look at the chart from this year. There's still a large precedence to say that this could be a fake out, that we're still heading down. And until something fundamentally changes, I'm going to stay in that boat. And I'm very open to changing my mind. I just have not seen what I need to change my mind on that.
So Frankie, Tim saying that going down, do you agree with Tim that we're going to keep going down, or do you see a possibility of we are going to be having a bounce from this point forward? What do you think about that?
So for me, some of the higher time frames, and when we get into the charts, I will definitely show you guys what I'm talking about. But some of the higher time frames, such as the weekly and the higher daily time frames, are looking to me like they could be putting in a potential bottom. But right now, I've been telling my community it's a very difficult time right now because we're in a bear market. The macro is very, very uncertain. So you want to, keep that in mind when you're trading or even just trying to buy in for your long-term investments. But right now for me, I do think this relief pump may have some legs. The question is, how big are those legs? I think, I think we could see it come a little higher just because of the way that the longer time frames look. But I do not think, my general, again, similar to what Tim said. I love that you said this, Tim. I'm open to changing my mind, right? I'm not just going to stick to my opinion because I'm emotional about my opinion. If I get new information, I will change it. So I do think maybe we get a little bit of a pump here just because we haven't really gotten much relief yet. But I do think eventually, when I show my charts, I'll be more specific. But, if we get that little relief bounce, I do think we will eventually roll back over and make lower lows. With that being said, when everybody's calling for 10K, you got to take that into account. Maybe, when the herd mentality, you might not want to go follow the herd. So you got to keep that in mind as well.
Dude, I couldn't agree with you more. I like what you said about I'm not going to allow my emotions to get involved here. And I know somebody in here for sure. It's probably all of you, but I'm gonna pick on Kagan over here. You are the most far thing from emotional that I've ever seen as it relates to like trading and charting. And I love it because the one problem that I believe that I have is that I get emotional, right? So that's like something that I need to work on. So Magic, I know that a lot of what you do is range trading, and you're looking at what's the word I'm looking for? That you're always looking at the shit. I can't even speak now. All right, pass. Whatever. You're range trade. You're doing a lot of range trading and looking at the looking at the books, looking at the shorts, looking at the longs, looking what's happening in there. What do you? We've heard up, we've heard down, we've heard up. What are your thoughts on what's going on?
Yeah, so we actually live traded the CPI in the group, about 3-hour session. It came down. The level we had in mind was $8,880.50. That was your structural support. That if you're watching the order books, had you lost that level on basis, you would have seen things like 17.1 potentially lower. However, you got a good bounce from it. What we did was we waited for the 4-hour candle to close and then just backtracked it to 1,210.50 on the pullback, and then just targeted the monthly open at 19,916, and then up to our key level was 20,688.50. Today, I think we wicked past it, weekly open potentially, but that was the target. That's also your time and volume point of control of the overall range. So from a range trading perspective, it was business as usual. When we came down there, you did see heavy selling at the beginning of the move, but then as you started tapering into the lows of the range, you could see open interest actually taking a nosedive and showing that people were actually closing out of those shorts, and the longs were starting to not pile in, but they were given an opportunity to reclaim the range and then actually rotate back up to, well, the POC, which is where most of the transactions have taken place. So very natural progression thus far. In terms of going lower, you know that I've got targets like that too. I believe it takes longer to go lower. That's something I've said for a while, that if we are going to go lower, it'll be later in the year, Q4. Could this be a bottom here? Absolutely. Anything can happen. But until we get some kind of data, whether it's a pivot from the Federal Reserve or Bitcoin changes behavior and we start breaking out of these ranges to the upside versus breaking down, there's really no point in claiming for macro bottoms. I'm looking for something along the lines of 23,100, give or take, if you can get above this 2688.50 level. Main reason being is that's a statistical monthly average, and this would be the third month in a row we haven't tapped it. Not done that since 2015. So from a statistical perspective, the upside is more probable from this region than the downside. Does that mean it has to play out? No, they're just statistics. But oftentimes, if you play with the right statistics and you keep them on your side, you know, risk management involved, you're going to come out ahead. So that's what we're kind of looking for right now. So big take profits already kind of been had today. And then now it's, can we get to the range highs and hit those targets?
Nice, dude. Nice. So with that being said, right, about macro bottoms and being here, so what are you guys seeing? And this is open question for anybody to jump in at any time you want. So what is something that you're seeing in the chart right now that could tell you, yeah, this is, you know, kind of we got too much resistance here. We're not going to we don't have the legs to keep going up, like Frankie was saying. Or what are you seeing here that says, hey, in this chart right now, I'm seeing that this is definitely a good indicator here that this could potentially be somewhat of a bottom, because the mentality has been lower, right? 10,000, 12,000, 13,000. And when everyone is now talking about those lower levels, just like we've seen it before, when everyone was talking about 100K, it kind of never happens because everyone is just expecting it. So what are you guys seeing in the chart that's making you think that this could be a bottom or this could be a top? So let's see some charts. And this, you know, anyone can take this first.
All right, I'll jump in on this.
Let's get it.
So I wanted it to go lower so I could buy. And when you hear people start talking like that, because I heard myself saying it, that never happens, right? Now, you might get a slam in the next 2 days, because remember, it's not a bull market unless you can buy a dip and make money. But so we showed that the token metrics support points wound up holding, right? And then on the DeMark work, there's a 13 bottom. So what DeMark's work will do, it'll count a certain set of conditions, right? This one will count 1 through 13. And when you see that 13, that was designed to be a warning of a bottom. Now, sometimes you get paid to ignore this stuff, right? But on this one, you got the 13 and then it went green the other way. And when I saw this, I'm like, hey now, right? Because there it is 13. And there's also something called the 9 bottom, right? Which again is indicating that the trend is stretched out. All right.
Bill,
So
is
I'm
it
like,
not to interrupt from you, but I just want to make sure I understand this. So for the people watching, is
Right,
this
let's go
saying
back
when
to
there's a 9 bottom or a 13 bottom, is it saying that, hey, 13 days in a row, like overall we've headed down, 9 days in a row, or whatever time frame you're on? Is that what you're looking at?
yeah, that's close, right?
Okay.
It counts a certain set of conditions, like
Okay.
I don't know, the high is higher than the high 2 days ago.
Okay.
So with the markets complex, in the legacy world, we've been trained to look for those 13 and 9s.
Okay.
So if you got the token metric support points holding and this holding, right, then I start to get worried, because I'm gonna give you the best of both worlds here on PowerPoint just quick, right? It's the 2014 example, right? And I'll show that on charts here. Okay, so I'm gonna say the answer is both. So this is 2014, right? And let me bring the view up better. Okay, so this was the wick down, right? I think our wick may have been smaller unless there's a calamity in the next 2 days. So our down move was CPI, and then this thing reversed and went materially higher from 550 to 700, only to bleed out over the next 4 weeks or 5 weeks, like bleed out hard to a new low. So I think really on the stream, everyone's right. I mean, it's got a shot at going higher only because there's people who wanted to buy it at lower levels and they missed it, right? So now they've got to, they're sitting there going, oh my God, do I buy ETH up 8%? And they probably won't. They'll probably buy it up 20%. And that'll be when you exit, right? Then, everybody will be going, oh my God, it's going back to 100K. And that's when it turns around and probably goes to 15, right? Bear markets, in bear markets, everyone loses money, bulls and bears. And this feels like, I'm just checking my own emotions. I'm like, I was really upset it didn't go down so I could buy, right? And then I looked at my charts and I'm like, is that what I think it is? Is that like a local bottom signal? I'm like, yeah, maybe.
And where can somebody find that? The basically the what did you call it? That has the numbers on it. What did you call it?
Well, that's symbolic. That's a DeMark software product, and I use that together with the token metrics level. So the DeMark work, gets you reversal signals, right? It does help with trend following, but it helps with trend ending.
Bill, how similar is that to TD sequential? Because TD sequential goes to 9. I've never seen a 13 on TD sequential, but even listening to you talk about it and show it, it had a lot of the same, even like that concept of the number keeps changing based off of how many candles ago it did something. Is it similar? Like,
yes.
It's
the original, right?
Gotcha.
DeMark's people actually went out and made their own version of TradingView. Okay, so it is TD sequential, right? I actually read the original book in 2003. Like I said, I'm over the age of 35. So when you look at the token metric stuff, when you look at all these AI support levels that held on our site, and then you see some of this DeMark work, you're like, wait a minute. Everyone's looking for 10, everyone's looking for 15. But as one gentleman said, that may happen, but it may happen at an unexpected future period. So, I mean, if this thing doesn't crash in the next 2 days, you may have to wait. I don't know. You may have to wait weeks for the thing to turn around and go down again.
So my question would be, and anybody can grab this either. My question would be basically what I'm hearing from everybody, and this is what I'm going to play devil's advocate a little bit here. A lot of times when I hear people, when they talk bad about trading, they talk bad about charting, they will come in and they will say, oh, it could go up, could go down, bing bong. And they kind of make light of that. Right. My question would be, is there something in particular for any of you? Is there something in particular right now that you would hang your hat on? Like, I'm really looking for this as some sort of a confirmation going one way or the other in the short term, medium term, or long term.
Was that an attack at Frankie there, Nick?
Yes, yes, it was. It was absolutely throwing shots as he comes onto the show. Or,
yeah, okay.
No, but you know what I'm saying? So is there something that you guys are actually looking for in particular right now that would say, hey, this is looking good to make this happen?
I don't know about the rest of you guys, and I'm going to keep my answer short. One thing that we're really big on is looking for confluence. Going off of one indicator, one thought is just never the way to go. And I'm sure the rest of you guys are like that as well. But, there's definitely signs and things that I use. I love using RSI divergences, both for tops and bottoms, to start seeing, a reversal is coming soon. I love that. That's why I asked Bill about T to sequential. I love using T to sequential. And I know it's more complicated than just looking at nines. There's reasons to think that sometimes it goes a little past that 9. That's why I thought it was really interesting when I saw those numbers going all the way to 13. But I think, to say that you're going to take any one thing, even technical analysis alone, I think that too many people rely on just technical analysis, and they don't want to go do the dirty work of going and looking at what's happening fundamentally in the news. And they don't want to do the dirty work of going to the charts on chain and looking at what are the wallets and what's moving around in the wallets. And I really do think, if you're going to make any trades with a lot of confidence, you got to find confluence. And if you think that there's one strategy that will work every single time without fail, you're setting yourself up for failure, because that's just not how it works. It's part of the grind is failing and reading it the wrong way, and then going back and learning why you read it the wrong way, and then upgrading how you approach it in the future. So I'll leave my answer at that and let you guys answer that one.
I love it. I love it. Frankie, I took an unnecessary shot at you. It actually wasn't a shot. I love when I hear you say that, so I just had to say it because I've never said it before. What are your thoughts on what Tim just said?
No, thank you for having me on. And yeah, I actually was going to try to hop on this one because, it was something that I was looking for. Let me just pull up my chart real quick. Now, it's funny actually talking about binging and bonging. I will bring that up in just a second, but this is, oh wait, that did not share my screen. Boom. Can you guys see my screen now?
Yes, sir.
Beautiful. Yeah. Okay. So kind of what I was looking for was this famous double green dot, or double blue dot technically on my chart, but this double green dot on the weekly time frame. Now, obviously you don't want to just go based off of this one indicator, obviously, but if you come back and you back test this, this did pretty closely call the bottom of the 2018 bear market, almost to the candle, not perfectly, but pretty close. But talking about, mixed signals and really, trying to figure out if we're going to come up or down from here is kind of hard in my opinion, because this double green dot was something I was looking for to finally see a big move, finally see some relief come in into the markets. As I said before, obviously you guys can see, straight drop, little bounce, straight drop down. I feel like there should be a little bit more relief coming in here. 50 to 100%, relief rally in a bear market is not uncommon. So we just haven't really been seeing anything come in as far as relief. And I was kind of hoping for this double green dot to play out. Now, one thing you want to realize is the longer time frames do take time to play out. So I remember when we were calling this, let me pull up Market Cypher A. We were calling this blood diamond on the weekly, and I was warning people like, this is looking like a bear flag. And all everybody saw here was a higher low and a higher low and a higher low. This is bullish. This is bullish. And I was just seeing bear flag, right? And then when we got that weekly blood diamond, I called that, and people came at my throat because everyone thought we were bouncing off of the macro golden pocket, or not the macro golden pocket, but people thought we were going to break out in a bullish manner here. And, the next day after I called this blood diamond, we happened to get a little bit of a pump. So people roasted me, but you could see if you give it time to play out, these things can play out. Now, the one thing that makes me a little wary here is, like I said, mixed signals all over the place. Now, Bitcoin has been loving these bear flags, right? You're getting these impulsive moves down. You go bing bong, right? Up and down. You consolidate up and to the side, and then you get another big move down, consolidate up and up, right? And then another big move down. And now we're creating what looks like another bear flag. So the one thing that is majorly different about these two bear flags and this new one that looks like we're starting to form here is that green dot on the weekly. It's also another really rare bullish sign as far as Market Cypher goes is right here. These, I might be covering it with my box here, but there are two double green dots here on the 6th day, which is another really rare bullish sign. So higher time frames, they're looking bullish. The higher time frames are looking bullish, but you have that bear flag on the daily. But with the weekly RSI as oversold as it is, I do think it is possible we could see a little bit of relief here. But again, as I always say this on my channel, bear markets can be brutal. So be careful.
I think Miguel's got a little background noise. He doesn't want to be on the stream, so I'll take this. So Magic, we keep seeing, like I said about earlier, like about a lot of the range trading that you do. These bear flags do end up with a lot of ranges, right? How can people trade these effectively? Like, what's a decent way to trade these for just somebody that's, just getting into this and really trying to figure out, hey, what the heck am I doing here in this bear market? Because I'm not doing anything well as it looks at my portfolio, as I look at my portfolio.
I'll share my screen and we'll kind of cover that. A lot of being organized to be up front with you.
Okay.
And we'll get rid of this here. So in terms of trading these, like this bear flag, for instance, so we'll get rid of the ATAS ranges and stuff that's on there from there. So if you're just tracking these ranges, and that's the bare minimum in my opinion. You're tracking based on market structure, okay? So you've broken market structure, a new range is forming, and a new range has now formed here. So you would just come in and from there track the next one, the January lows, and this is all one giant range. And the reason you know that is it continues to overlap. You're never actually physically leaving the range without returning to it. So this would be its own range. This would be its own range right here, and then vice versa down into here. So it's a little more subjective in that regard because you are going to be picking these ranges yourself, but it's going to give you a general rule of what kind of a range you're looking for. Is it going to be perfect and catch the exact highs and lows? No, because this is one standard deviation of volume. It's not meant to be all of it. It's just it's supposed to show you where a majority of the price action is going to take place. Then once you find acceptance back into this, you're looking to trade it back down into the range. So if a person was doing that, they would get quite far, actually. You can see I've been doing this since all the way back since Bybit was even Bybit. I've been trading on Bybit since it became an exchange almost. So that would be the bare minimum. After that, track them by time. You have to take subjectiveness out. So you should be tracking your weekly, your monthly, quarterly ranges. I've made copious amounts of videos on quarterly ranges on TikTok when I first started out. Showing people how good they are and how you can actually find where price is going to retrace to. So we had 19,228 on our chart for a while, knowing that if we were to break down from this and get a back test of this old June low range, which was right here. So you can see that this is a perfect back test of the old range. You just market structure, boom. You now know that at a minimum, 19,228 is where you're going to be looking for. Because that is going to be like an inefficiency because you had a naked point of control from the move up. So it just gives you a target. And then it's just being organized, not diddling in the middle. You'll hear me say that. What that means is if you're in the range like we are right now, so this is our current range, and we'll go down to a 4-hour for it. So this is a little less in depth than other things like ATAS or EXO charts, but it gets the job done pretty well. You don't want to be messing around here in the middle too much. This isn't a place that you're looking for a swing trade. So what a range can really do for you is let you know when you should be getting involved. Like when we got this move up here, you found acceptance back into the range. You have a clear rejection. There were other things that were there as well if you were watching like the day trading side of things. But now you're looking for, at a minimum, we're looking for 20,000, 20,500, and then all the way back down to these levels here. And for us, 18,880.50 is that level. You can see it right here. That was the level that's going to be respected. Find that in several different ranges as well. So once you have a range, you can then start finding out where's your structural support and resistances. This is a pretty good one right here at 48K. So we actually came up and back tested this one perfectly on the way up. So again, this does go down to a little bit of effort on the trader's part, just staying organized that are going to set them up for success. You'll hear me harp on it a lot. But when we set in the bottom of this range here before breaking down, you actually had a swing failure pattern here on the 4-hour, and it continues to be respected all the way up here and actually did not close back above it. And that would have been a change of behavior had we done that. So we were just looking to see if we couldn't take some liquidity, come back to the yearly pivot was there. It's a statistical target at that point. We know it's a massive resistance. Point of control of the overall range was there as well if you were to combine all data and merge it. So there's no one set way to use it, but that's how I use it. And I think, it keeps things somewhat clear. The problem is when people start bringing up all the ranges, and then there's too much information. So I always tell people, keep it simple if you can. Just look at this one area and just note that on the entire way down, everybody's saying, when are we going to break out of this, bear market? When is it going to be a bull market? Well, show me a range that hasn't broken to the downside. There is not a single one that is broken upwards. See how everything is trending down. So you're looking for a change of behavior. If this breaks to the upside and we actually start reclaiming some of this ground, specifically 32.9K, you can use this range data and say, man, we found our way back into this macro range that was multi-year. Where's my next target? And you can on there and you can look for like NPOCs or something here, and you can say which ones are the ones that are most valuable to me. To me, it would be 38,922 just off the top of my head, this one here. So that's well and far away. That's something that's not really worth discussing yet. But if that hypothetical scenario played out, that's how you would use the information.
Dude, I love that, because for me, that one of the things that I get overwhelmed with when I get into trading is having too much info. There's so many different things that I can look at. What do I look at? What do I not? And that actually brings me into my next question. It's for you, Bill. Bill, you guys do machine learning, some AI stuff. Talk to me about, so we've got a lot of people in the chat that maybe are newer to trading. Maybe some of them are not. I know I like to be able to use maybe some more simple, straightforward ideas, just like Magic just said in the range. Talk to me about what the machine learning looks like. What does that do? How does that help you? What are you looking at there?
All right, good question. So let me share this. So, back to what you said earlier, everybody knocks technical analysts until there's trouble. And then they want the charts. So that's what it reminded me of, particularly when you're dealing with wild ranges. So, again, at a simple level, this is how we define the ranges. The AI and machine learning draws the support and resistance points. Some points may look obvious, some not, but the machine is always learning how to read the charts. Now, when it comes to things like what coin should I buy or sell? Okay, so like say every day, let's say you're a crypto.com person, that's where you trade, right? Okay. One of the things that Token Metrics will do is it'll identify the coins that have the best grades. And what's a grade? Well, that's an AI looking at TA and finance math all rolled into one. All right. So it looks like a portfolio. And if you're interested in any of the one coins that say come up for, say, a day trade, you can click on it and study it, right? So quant, because we're like a momentum house, we like to find stuff that's breaking out, right? So here, the yellow line is our AI grade, and we're always looking for something where the grade breaks out before price does, right? Luna, the grade dumped at 80 and never went back up again. So in these particular cases, we're always looking for something, right? And then if you click the TA tab, right, you can say to yourself, all right, we have like what's called visual trends, which again is the machine learning, right? Now, this isn't perfect, but if you're looking for like the altcoins that can perform while the big coins are in a range, because I think the last gentleman made it really clear that, if you're playing Bitcoin or ETH, it's breaking out or going down when it leaves the range. So with us, we can do that, for altcoins, and we can also do sectors. So in other words, you might ask yourself, well, is the whole market dumping or is everything bad? Well, actually, no. Yield farming, if you look at this sector over here on the left, yield farming as a sector has a token metrics grade of 72. Normally 80 means good Mo if we're in a Mo market. I mean, we're not. But there actually is stuff performing while the big coins fly around in a range. And, so that's the token metrics angle. And, to your first question that you asked earlier, well, you're right. It's over, or there's something new when it breaks out of the current range. You're like, oh my God, ETH's up 8%. Yeah, but it's in the middle of the range. So they can give technical analysts a hard time, right? But at the end of the day, the range matters. And what also matters is, those institutions, they're out there. And maybe in this case, they sold it in the prior range And I'm wondering if they're trying to accumulate in this one. Because like I said, when that CPI number came out, the market should have gone a lot lower. So we got 2 or 3 days to see, but somebody was down there.
Yeah. Yeah, I totally agree. And I actually think that a lot of times, I'm gonna let Miguel jump in here, but I actually think that a lot of times the CPI numbers are, listen, up a couple points, down a couple points, whatever. I think at the end of the day, a lot of the upcoming news, I think sometimes gets baked in, and some of the reactions, it's just my thought, some of the reactions are not so much reactions as they are manipulation. I feel like they play off of what should happen. Hey, here's what everybody's going to read into this, and we're going to do the exact opposite, because it's all a freaking mind game, I think, with some of the institutions.
So I love the fact that Bill brought up
it kind of is a bit of manipulation.
What was that?
I was going to say, not to interrupt at all. So this actually, we a lot of places like Prop Desk won't let you trade event. A really good example of this was on January 20th. There was a Fed meeting, and the meeting was not bearish, bullish. So people just assumed it was bullish news, right into resistance. When you get events like that, it's opportunistic for the bigger player, for those that are getting caught offside a lot of times. And so CPI numbers to me, and people can correct me, it's lagging information, but it affects future orders. And we don't really have a good way of predicting it until we have the information in our hands. And so I think a couple days out, we'll find out what's really going to happen with the future orders. But I think someone saw opportunity and a lot of fear. And they were like, this is a great place. If I wanted to fill, how else am I going to do it? So kind of piggybacking off what he said. But a lot of times at those events, you'll see things like that, where it's just a very clear cut. Like I was doing this, we were trading that one. It ended up being a higher range up a little bit later, but someone said it was just longs closing out at the high of the range. And I was like, dude, somebody's filling a massive short position. Like you can see it clearly in the delta. You can see the OI. It was easy to get on the right side of that as soon as you had a clean market structure break, and you could see the market sales just piling in after. But someone had sat there with a limit order and was just watching people FOMO in because the Fed news wasn't bearish and people were excited about it. This is back before the raising of the rates just became like an everyday thing. But yeah, interesting to see how these events play out. But I think the CPI data is, I do think we need a little bit more time to figure out exactly what is that going to do long term for us. But I agree with Bill actually that a bounce out of this area for even a couple weeks could definitely happen. And then you've got to see what those players are going to do with those. Are they accumulating, or are they just looking for a quick in and out, and they're going to dump their bags higher again and then send it lower,
Do you guys mind if I share my chart real quick? Because even like what Kagan's talking about right there, I actually went through and I went and looked at every single day that we had any type of information come, from inflation, and then every single time we had the FOMC respond. And so you guys are going to see these blue arrows. So I, put them as close to where I could. Blue arrows signify when we had a date come out with an inflation number. All the green arrows are signifying what the FOMC's response was. So sometimes we even had 2 blue arrows in between the green. But you'll notice, we had 7 come out right here. We dipped down. This is one of the few times in 7.5. Those are the few times that we didn't have to have the FOMC's response. But notice early on here, especially as the Fed came out very dovish with their response, it led into those rallies. So this is that 25th he was talking about, 26th area where he was talking about we ended up rallying right after that report. Because why? They came out and said, we're not going to raise it at all. We all, as Americans, knew that the dollar had been massively inflated. We saw the reports of 7%. We knew that those were false numbers and that it probably was a lot higher than that. We went down bearish because we knew that. But then when the Fed didn't do anything, this, of course, what is Bitcoin? It's going to be a good fight and a hedge against inflation. So if we're not going to do anything to bring strength back to the dollar, let's go ahead and pump it. Same thing that happened over here in March when we came out with reports of what happened in February. Yeah, they decided to raise it a little bit, but even that response that Jerome gave was very, very dovish. Very, hey guys, it's okay. We have this under control. We don't need to get aggressive. So of course, hey, okay, we're not stupid. The US dollar's not doing well. Let's go ahead and pump this again. As you start to move over here where the numbers got more serious, we really don't see any dips, massive dips, except for this one over here. And I'm going to get that in just a second. We kind of see the market move sideways after inflation numbers come out just to see how the Fed actually responds. And this 50 basis point was historic. It's funny because we had 75 over here and we're probably going to have another 75 over there. But at the time, 50 basis points that quickly, that was big. Like that, the Fed hadn't done anything like that in over 40 years. So consequently, now we have our bearish movement that came. We had our 8.3. It slowed down. Instead of moving down sideways like we did after 8.5, it moved kind of sideways to the top. 8.6, we did start to move down. This was a historic number, but remember, this is also the time frame that Terra Luna had its whole fiasco. So, of course, we plummet down here, and then it doesn't help that the Fed comes out and finally officially says, hey, guys, remember last month when we said that we would need a lot of months of data to get anything higher than 50 basis points? Yeah, we're going to speed that up a little bit. It's getting out of control. We're going to go ahead and go 75. And so now that we have this 9.1, as scary as that is, if the Fed does not do anything about it, if the Fed stays at 50 basis points, which some people are expecting, I'll show you that in just a second, that actually could lead to some bullish. When I told you guys I need to see something change my mind to send us back bullish, if the Fed comes out weak here in about a week and a half, then I will change my mind. There's a chance we could rally back to the upside. We do have a little bit of time, though, between this number and the meeting. And right now, this right here, this is the CME futures, the prediction they're betting on. What is that that number from the FOMC going to be? Last week, right here, look at this number. 94% voted that it was going to be 50 basis points. Why do I say 50 basis points? Right now, we're sitting at 1.75. So getting us to 2.25, that would be an addition of 50 basis points. Last week, 94% of these voters or predictors, or they're betting on this. They thought we were going to only stay at 50. Only 5% said that we were going to go, 5% actually, look at that. They said 25. So there was actually no one even predicting 75. The last week, it was almost like hey, the Fed is going to be pretty dovish on this. Fast forward to yesterday, right after that news broke, this completely shifted. No one's voting for 25 anymore. 82 are now voting for 75. Only 17 are voting for 50. Now, it did shift back. There's been some news that broke today. I think that there's a lot of indecision right now. So 57% are voting for, or I keep saying voting. It's not voting. They're predicting 50 basis points. 42 are still predicting 75. So let's see this play out. But going back to the chart, the real bearishness doesn't necessarily happen until the Fed actually makes a decision. So while I expected this to kind of move sideways and down because this was a 9.1 inflation, moving sideways and up is not necessarily ending the argument that we're going to not go to the downside. The real key to kind of sealing in, is this price going to get bad, is when we hear the FOMC report. Because even this, after that number, we knew that the Fed was going to get serious. So we went ahead and dropped. We had Terra Luna do this whole fiasco. We had a 0.75. I think as we watch the next couple of weeks develop and we watch this chart continue to move and change, that's going to be the key to, can we sustain and have a short-term bottom, or are we going to go ahead and drop down to those teen numbers again, potentially even the lower teens?
That's great. And I keep coming with the same question, right? The same question keeps coming to me. We have always said, or at least since I've been in the crypto market since 2017, we've always said that Bitcoin is set up as a hedge against inflation. So my question is, where's that at, right? We've got inflation going through the roof. What's wrong in that regard? Is it the macroeconomic factors just all around the world, or is there something specifically that's happening that maybe I'm just not seeing?
All right, I'll take that one. So Bitcoin is a hedge, or Bitcoin is a way to play when the Fed is pumping sugar and money into the market, right? They printed $6 trillion in 1 month when COVID started, which was more than they printed in the last 12 years. So Bitcoin is a hedge against monetary inflation, right? It's the way to play it when the money wave is coming. Now, once prices go up at the grocery store and the Fed gets involved, right, they pull the punch bowl and all risk assets wind up going down. So, that's one of the ways to think about it, like monetary inflation, Bitcoin up. Fed coming in and pulling the punch bowl, like I saw the .com blow up, right? I think the Fed had to tighten 50 basis points once to wreck the entire market for 2 years.
Bill, thank you for saying that. That is as long as I've been in the crypto space and as educated as I feel like I am, I have not had somebody break that down so simply for me. I really appreciate that. I'm gonna look farther into that. Frankie, I think you were getting ready to say something about the same question.
Yeah, I was gonna kind of say the same thing. Is like, the macro, in my opinion, has a lot to do with it. When you have, prices of normal things, right? Gas prices are going through the roof. They're actually coming down by me a little bit, but when you have all these prices going up and everyone's talking about the looming recession, if we're not already in one, you have to understand that people are going to rush to risk off assets. And that's, I think everybody kind of thinks like, hey, like what's going on? Like, why isn't Bitcoin coming in to save the day? And it's, crypto is still new. It's still a risk on asset. And, in these times, people aren't going to be running to, think about going to old money, right? You're in a recession, macroeconomics are horrible. And you go to old money, be like, hey, buy Ethereum. And they're like, are you kidding me? Like, you're trying to get me to buy Ethereum right now? We're in a recession. People are flocking to cash. People are flocking to, precious metals, risk off assets. So, because I get why people ask that question. Because, it makes sense. It's like, I thought this is why Bitcoin was Bitcoin's supposed to save the day now, and it's not happening. And then, on top of all this stuff, like Tim was talking about, the Luna stuff and all these exchanges going down and stuff, that's just adding more fear into the market. We're at the bottom of it. We're in the depths of a bear market at this point. But real quick, I did just want to share my chart and kind of show, my basic, idea. There you go. You can see my chart, kind of where I think this could go in the short term. Now, again, obviously, there's other factors at play here. So you want to keep that in mind. But I do think that if we wind up seeing a break to the upside, I think we could potentially, everybody wants to know where's it going to go, right? What are the targets? I do think potentially in, a more bullish case, right? Not just the bullish case, but the more bullish case, I do think there's a chance that we could eventually work our way. If we get this big relief rally, I do think that we could work our way up here towards that macro golden pocket that we were stuck on for quite some time, and bearishly retest it. And again, I always caution people, if we do get a breakout here and we wind up, coming out of the bear flag, flipping it to support, moving our way up here, the perma bulls are going to be coming out of the bushes, and they're going to be like 100K incoming. Here it goes. Extended cycle. Told you guys we're going to all-time highs. And I caution people to be really careful about people saying that. In my opinion, I do think if we did come up and retest this golden pocket, I do think eventually we would just wind up rolling back down and heading lower to possibly put in some lower lows. And what is the range that I have? It's the same range that everybody else has. It's between 12 and 9K is what I have. It's funny. I had Garrett Soloway on my channel last week, I think. And he has very similar numbers, but the way he gets to the numbers are completely different. So yeah. I find that very interesting. But that's kind of what I'm looking at. If we can make it up to that golden pocket, another level, if we went a little more bullish than that, another level I give people is this trend line. I'm not going to try to get this perfect, but essentially this trend line that, we've been rejecting off of here. Maybe we make it all the way up there and then crash right through the golden pocket to make those lower lows. Again, the target being between 12 and 9K. And then real quick, just to point this out, we do have a big gap in volume here. So if we do wind up breaking out of this resistance, basically this bear flag, we could see price action start to pick up pretty quickly through this low volume pocket. You have a high volume node down here and then this big empty pocket. And you could see with these low volume pockets, a lot of the time you will see price dump or rip up right through them pretty quickly. So if we could get out of this bear flag, I do think you could get moving pretty quickly. But, again,
we got
market activity.
Yeah, exactly. Bear market activity. We've seen this before. I just want to take a quick, just a quick second, guys. First of all, if you haven't already smashed the likes, please smash the likes. You know what time it is. It's YouTube. YouTube likes to see that. And obviously we like to see that. Follow all of these creators. And if you haven't paid attention, there's a theme happening tonight. And we're talking about macroeconomic factors outside of the crypto space affecting things within the crypto space. And so just want to remind you that with Danger Close Alpha, that's what we are doing. We're trying to get people to say, hey, you know what? We need to be prepared. There are people in the crypto space that are preparing for the fall of the dollar. With Danger Close Alpha, we're just trying to say, hey, you need to be prepared to take care of your family should something happen in the world that we live in right now, whether it's a natural disaster, whether it's government tyranny, no matter what it is. So check us out at dangerclosealpha.com. It's definitely going to be some fun. And we got a free mint coming up. So, and hey, we're doxed. We're here. We will continue to be here. So check it out. We're excited about that. So let me wrap it up, gentlemen. I kind of want to do a little around the horn here What I'll start off. Let's see. I think Magic's up. Magic, let me start off with you. What would you tell, and I always like to ask this because I think that it's interesting from week to week as we get different information from different places, like what's kind of the smart play here. What would you tell people that are actively trading right now? Is there any sort of a maybe little tip? Obviously, we're here for entertainment, not financial advice, but what would be something that you would tell somebody that's trading right now to either be careful for or to really be paying attention to?
There's a lot of indecision in the market. So what I would say to those that are trading right now is this is not the time to just be juicing your account and going for it on all-in plays, things like that. Maybe wait for a clear direction or a change of direction before you start doing something like that. And the other thing is if we go to 10K, 12K, whatever that doomsday number is, and you started DCAing in just under 20K, you have to look at it from the perspective of if that's a long-term position for you. Are you upset that your average is $15,000 or $14,000 or whatever it may be? It'd be like saying you're upset with a $4,500 average from 6K to 3K in 2018 and Bitcoin went to 69K. It doesn't make sense. So have a little perspective. And this is the time to preserve capital, not the time to be just letting it shift into other hands, larger players in particular. So be careful. Wait for the trend to change. If you want to start longing, wait for that confirmation. Wait for the low to come in. And that's all. That's it. Patience.
I love that, dude. We talk about it all the time. We talk about dollar cost averaging. I think people think that I'm boring, like that it's the, like, oh, here goes Keeper again talking about dollar cost averaging. Well, you know what? It works, right? It works. It's worked for me. It's worked for many other people. So I love what you're saying. Just be patient. Patience, I think, is one of the best things that you could ever do, especially in the crypto space that can be pretty volatile. Tim, what's kind of your take on maybe something else that people might want to pay attention to?
Yeah, I mean, so I've said this probably 100 different ways, but it's the same sentiment. Start embracing failure. Start embracing taking risk and failing. Now, to Magic's point, not the whole cash cow. Don't invest everything and then say, oh, I failed. That's it. But start making little trades. And there was something at the I think it was Bitcoin Conference 2022. There was this session with Jordan Peterson where he talked about how he got into Bitcoin. And it really wasn't until he got in and got skin involved in the game that he actually started to really dig deep and care enough to do the research he needs to do. And the same thing, when I was in high school playing football, it's really nice. I was a running back and I remember my coach all the time. I'd be carrying the ball a little loose, say, Tim, tighten that ball up, tighten that ball. I know, coach, I know. It's not until someone actually strips at that ball and you lose it that you have to then go, that failure is like, man, now I need to squeeze harder. Same thing. As you're trading, this is the time to invest in your education, to keep doing it. And you know what part of education is? Part of education is taking a test, getting the answers wrong, finding out why you got the answers wrong, to go back and take another test again. So embrace the failure. And I promise you, everyone who's sitting on the sideline, just watching YouTubers or other traders get things right or get things wrong, and then you're sitting here analyzing like a couch coach. Oh, okay, that's, they should have done this, or they should. No, get in there, embrace the success, and that's great. But specifically embrace the failure, because that's where the real lessons will be learned and will set you up we're at the bottom of the bear market. Whether the price is there or not, I think we're getting close to the time. When the bull market comes back, that's when this education you're getting right now from all that failure will pay off more than you have lost. That's my advice. Embrace the failure.
Wow, Tim, I love it. I love it. I love it. I have learned, and I can echo what you're saying. I've learned hands down more in my life from failure than I have from success. It's just a fact. It is at least for me, the way that I learn. It's just that ever-present reminder, like, okay, here's what I did wrong. Assess what could I do differently here, and then boom, the next time I do it, I'm going to do it a little bit different. So I love that. Frankie, I saw you shaking your head like, yeah, give me more. Yeah. So what are your thoughts?
Yeah, I couldn't agree more. Listen, I talk about this a lot on my channel. If you are watching this stream right now, you are winning. The people, lot of retail is gone at this point. Most retail is gone, and these are the people who have left. They've sold in the red. These are the people that are going to come back when Bitcoin is already ripped, and they're going to buy the top. If not the top, they're going to get close to the top, make a little bit of money, probably think it's going to $1 million and hold again. It's the people in this stream right now that are taking the time when crypto is boring, when things aren't as exciting, things aren't going straight up in a straight line. It's the people here that I always tell people in the bear market, even before we were in the bear market, I was telling them, when the bear market comes, double down on your research. Listen, people are scared to pay money for a course. I don't even offer a course as of right now. But like whether whoever's course it is, you want to get it from a reputable person. But like Tim was saying, invest in yourself. And whether that's in the form of a course to learn more TA, or if it's you putting a little bit of money in a trading account and just getting your feet wet, get your hands dirty, get those emotions to creep up while you're trading. And don't invest, don't put more in your account than you're willing to lose, especially in the beginning. But if you put $100 in, $200 in, you want to mess around, don't worry about making $1,000 or $1 million on every trade. Don't worry about the dollar amount. Worry about getting those winning trades. And if you lose the whole account, the whole $200 say you put in, you pay $200 for a course that you could not have, for information you could have not learned from any course. So definitely learn from your failures. It's the best way to learn. Absolutely.
I love it. I love it, man. I think that there's so much wisdom coming from a panel of people that have been in the crypto space. I think we would all agree that we've probably made some really stupid mistakes. I actually shared with Bill. Bill, I shared this with you when we were down in Texas, I believe. One of the I was watching Token Metrics back in May of 2021, and Bill was literally saying, you guys can check this out. Bill was saying, listen, like sell in May and walk away. That's a stock market thing, right? Well, I'm telling you, that's going to happen right now. I remember specifically, ETH was maybe around, I don't know, $4,300 or something. It was around there. I don't know the exact number, but as many of you know, I am an ETH bull. I am heavily stacked in ETH, and I, made some decisions based on some of that and some other information. And I also didn't follow a piece of that as well. I followed some of it, but not quite like with the conviction that maybe I should have. And I look back and I missed, I learned something from it because I didn't gain the massive amount that I could have from saying, hey, you know what, there's some knowledge in that. I see this, that, and the third. And so I love the fact that, hey, it was a hard lesson to learn, but here we are. And looking back on it, it's like, okay, that's something that we need to look at. So Bill, what are kind of your closing thoughts for the stream?
All right. So you mentioned sell in May and go away, and I added beware the failed rally. That was at 3K. Now I think we got to embrace a couple different slogans, right? First of all, it's not a bull market unless you can buy a dip and make money, right? So if it goes up, that's great. But can you get the dip and get gratification and make money up, right? Every time you tried to buy a dip lately, obviously, you know what's happened. Mm-hmm. Second of all, make them sell it to you at a good price. What does that mean? Well, everyone's got their homework that they do, or everyone's got somebody that they watch, right? If you don't get the level that you want, if you don't get the setup on a trade that you want, then don't do it, right? The hardest thing in trading to do is to do nothing. Is to sit there and stare at the screen. You're like, oh, okay, it's going up, it's going down, but I'm not doing anything. Sometimes you have to do nothing. Like maybe you had to miss an 8% rally in ETH today, and maybe 2 days from now, you may get to pick it up cheaper, or maybe you may not want to pick it up cheaper. All right. So a lot of times when you have sell in May and go away, you come back for the summer rally. Okay. That remains to be seen, right? I love it that, the fundamental guys are cheating with charts and the TA guys are watching odds of Fed rate hikes. I love seeing, the crypto space become as sophisticated, as, the full-on legacy analysts. The good news in crypto is we can do it with guys like us rather than, skyscrapers full of people. So,
yeah,
like I said, I think the best asset that you can have, the best position and portfolio, is the one that helps you sleep at night.
Yeah. Wow, that's great. I know one of the problems that, and I love hearing you say that. I know one of the problems that I've had in the past when I'm trading with too much leverage, and you guys know I don't do a ton of trading, but when I have traded with too much leverage, first of all, I've learned use a stop, right? But a couple times that I've went to bed without a stop, it's interesting how I don't sleep as well that night. You know what I mean? Like literally waking up at 2 a.m. to, use the bathroom or whatever, because I'm an old man now, right? And the first thing that you do is not, hey, I got to use the bathroom. First thing I do is grab my cell phone and I'm like checking like what happened with this leverage trade that I'm in. Guys, it's not really probably healthy. It's really not. And
I
so
call those the Bybit sweats or the Femex
Dude.
fever.
Yes, dude. And it really is that, because it will take away from just your normal everyday life. So I love hearing that. It is really important to have a life outside of crypto.
Yes.
Crypto can provide for you long term. I know it has started to change my family outside of my other businesses. It started to change the outlook long term of where I know that my family's heading financially because of crypto. But in the meantime, I have to take a step back sometimes and say, you know what? This is not everything. This is a piece of the puzzle that is going to help me succeed. What's up, Tim?
Nick, call it what we will. Some people say financial freedom. On our channel, we have hashtag FinSov, financial sovereignty. Either way, it's the same thing. The concept of financially being free or being sovereign is that you have complete control over your finances. Your finances do not have control over you. Going to sleep without a stop loss and waking up with those Bybit sweats, as Frankie puts it, means I don't care if you have $1 billion in your bank account, your money is controlling you. That is not freedom.
Ooh.
That is not sovereignty. Don't do it.
Wow. Dude, I couldn't agree more. I couldn't agree more, because one of the things that I know I've noticed is, as I've become more financially free, and I'm not where I want to be yet, it takes a level of stress off of your plate, or at least it should. And I think what you're saying is, if it's not, then is it really freedom? Because that's not going to feel like freedom. It doesn't feel like it if you absolutely have to know what's going on at any certain time with a particular trade. That's not freedom. That's being chained to whatever trade that you're in. And you're probably at that point trading with more than you really should be if you're feeling that type of way. So I can resonate with all that. So Crypto Fam, we appreciate you all for being here. You could be anywhere on a Thursday night, but you are here with us with Debate Crypto. I want to thank Bill, Tim, Frankie, Magic, Miguel had to run off real quick, but I thank you guys for being here. If you are not familiar, Thursday nights, guys, if you just love your TA, we're starting to do kind of like around the charts, right? You've heard around the blockchain. We're on there with BitBoy Crypto. This is kind of the around the charts. I love hearing all of the different. The thing that I love is I can hear 5 different ways of looking at the charts, or whether it's machine learning or range trading or whatever the case may be that you guys are using. Pretty consistently, you guys are coming up with some same ethos, like the idea of what to be careful for, and I think it's really interesting to see all these different ways coming, to a similar conclusion. So I appreciate you guys for being here. Make sure you follow everybody that's on the stream, guys. Their information will be down below the video, so make sure to check them out. And Crypto Fam, we love you. We appreciate you for being here. Just remember to question everything, trust nothing, and until next time, hodl like it's hot. We'll see you soon.